Are you confused about car insurance? Did you just select the same kind of coverage that your parents did? Because I don't know, it's confusing as heck. In this video, I'm going to walk you through the exact steps to figure out how much car insurance you really need. And spoiler alert, you have the potential to save big money, so stick around. Okay, so liability coverage, liability insurance covers any bodily injury or property damage when you have an accident that is your fault. In other words, if you were to hit somebody, your insurance would cover the cost of the repairs to that car, or if you caused any harm to the person, like physical injury, liability insurance. This is the basic type of insurance that everybody needs. It's illegal to not have this type of insurance, so make sure you have it. So bodily injury liability, think of this as medical costs. Property damage liability, think of this as the cost of the repairs to the car. Comprehensive insurance covers any kind of repairs to your car that did not result from a collision. Let's say your car got broken into, a tree branch fell on top of it, your car caught on fire unexpectedly from a natural disaster, a hailstorm came around. Any of those things would be covered by comprehensive insurance. And the last type of insurance, number 3, is the collision insurance. Collision insurance covers the cost of repair for your vehicle if you are involved in an accident. And it doesn't matter whose fault it is, whether it is the person who hit you or you hit somebody else, collision coverage will cover the cost of repairs to your car. Your own liability insurance does not cover the cost of repairs towards your car unless the other person is at fault, and then their liability insurance would cover the cost of your repairs. And let's say that other person didn't have enough liability insurance to cover the cost of your repairs. This is where collision coverage would help you out. One important thing to note here is if you have a car loan, you may be required to have full coverage, which means all 3 types of insurance on your car. So while you may not have the opportunity to pick and choose the different insurance types that you want, you do have the option to shop around different insurance companies to get the best rate. Okay, step 2, you need to determine how much car insurance you need. I will say this, it is a really good idea to maximize your liability coverage. Now, generally, most insurance companies will max out in 3 different areas. This would include personal injury, total injuries per accident, and property damage. So when you go into your insurance coverage, you can log on to your account. You should see 3 different numbers. The max generally for personal injury is $250,000. The total injuries per accident is $500,000. And the property damage max is $100,000. Now, I wanted to show you guys exactly what type of insurance I'm carrying with my 2015 Subaru Forester so you can get an idea. But I have maxed out bodily injury and property damage liability to those exact numbers, $250, $500, and $100. So it's a good idea for you to max this out if your numbers don't match mine. And to give you an idea of how this would impact your premium, I went ahead and went inside of my insurance coverage and I did some changes hypothetically to see how it would impact my rate. So from the drop-down menu, and I'm on Progressive right now, I could select from the 250, 500, 100, and let's say that I just dropped it down to half that. 100 per person, 300 per accident, and 50 per accident, and see what that does for my car insurance premium. So you can see it actually reduces my premium from $215, and this is paid out every 6 months, to $197 for a 6-month premium. So my premium overall would drop $14.78 if I switched within my policy period. But if you look at the effect of the entire 6-month period, because I pay my car insurance every 6 months, which we'll talk about how that saves you money as well. That's the difference between $215 and $197, and it only changes my 6-month premium by $20. So let's get this straight. Cutting my liability in half only saves me $20 for 6 months, so it only saves me $3.33 per month. I don't know about you, but paying just $3 extra to literally double my liability, I think that's a pretty good deal. So maximizing your liability insurance is key. Next, you're going to take a look at your comprehensive coverage. It's pretty inexpensive to add, so I would suggest including this as well. Here's a very important note about comprehensive and collision coverage. Raise your deductible. If you have $1,000 in your OSHIP fund that's set aside for emergencies, if you have at least $1,000 in savings, raise your deductible on your comprehensive and collision coverage. And just for kicks, I'm going to show you what happens when I reduced my deductible from $1,000 to $100. Okay, remember, comprehensive insurance covers any repairs to your car that did not result in a collision. So these are things like natural disasters, theft, that sort of thing. So when I went into Progressive and I changed my comprehensive deductible from $1,000 to $100, that was a difference between paying $23 to paying $76. It actually is a big difference because it costs me $53 more. The change raises my premium from $380 every 6 months to $433. So that's a difference of about $8.83 additional per month, or $106 per year. A great way to save even just $100 per year in my case is just raising my deductible. Now, let's see how changing the collision deductible from $1,000 to $100 changes things. Okay, so this is insane, but when I changed it from a $1,000 deductible for collision coverage, which was $105 for a 6-month premium rate, dropping it to $100 increased my premium to $290. That's insane. This by far is the biggest swing impacting my premium. By lowering my car deductible from $1,000 to $100, I effectively increased my premium, basically the money that you pay towards the car insurance company just to keep your car protected. I went from $380 for a 6-month period to $565. That's a difference of $370 per year. If you do anything, if you take away anything from this video, I highly suggest that you increase your deductible on your collision insurance to $1,000. So you're probably wondering, why is that such a big difference in a lower collision deductible than a higher one? Well, what you are basically telling the insurance company is that you are willing to take on less risk if somebody hits you to pay for that out-of-pocket repair costs than the insurance company. And the insurance man be like, oh, you don't want to pay more for the collision coverage? Then we're going to charge you more because you are a more risky customer to us, and we're afraid that somebody's going to hit you, and you're not willing to pay more upfront out-of-pocket costs. That's why it's so important to have at least $1,000 in your emergency fund. This is the OSHIP fund that I keep talking about, because if you have at least that much money, you have the opportunity to save yourself some mega bucks on your insurance premium. Okay, so step 3 is to get multiple quotes from multiple car insurance companies. So you're going to have to do a bit of legwork to shop around, but now you know what to look for, right? Liability, you are going to max out. In my case, it was $250, $500, $100. You're also going to opt for comprehensive and collision coverage with a $1,000 deductible in each. Got it? Then you're going to request and put that out there to different insurance companies. Now, I recently used a tool called aLgewY, that's GABI.com, and what I did was I downloaded my coverage policy from Progressive. I uploaded it into aLgewY's system and I said, keep my coverage the same. For you, you might opt to change your coverage to what I listed out. And then they're going to email you and say, hey, these are all the car insurance company quotes that we selected for you that could be a good fit. And then you can opt to choose to switch through aLgewY. It's really simple. I'm going to drop my link below so that you can sign up and see how it goes. Because I had already maxed out my liability and my deductibles for comprehensive and collision, I actually was told by aLgewY that I was getting a good deal, so I didn't make any changes. And then they're just going to keep that on record so that if there was a new quote from another insurance company, they would be able to notify me and then I could make a switch. You do not have to be brand loyal to these auto insurance companies. They don't care. They want your money. And what I really like about this is I'm okay switching so that I can get the best deal and the best coverage. Okay, once you get the multiple car insurance quotes and you're able to make some adjustments, step 4 is optimize your car insurance to get the best rate. Now, one thing that I really liked about Progressive, and I know a lot of other car insurance companies do this, is you can bundle other insurance policies with car insurance. So with Progressive, I bundled my renter's insurance and auto insurance into one, and we get a slight bundled discount. My other trick to saving money on car insurance is opt to pay the 6-month premium rate instead of the monthly rate. When you pay the monthly rate, you're actually paying slightly more than if you were to pay the 6-month rate. In my case, my monthly rate was $72 and my 6-month rate was $380. Well, when you divide the $380 out by 6 months, it only ends up being $63. So that's a difference of $9 that I'm saving, or $108 per year. And I don't know about you, but I'd rather save that $108 for something really nice. A really quick trick to do this is simply add in that 6-month premium to your budget and budget out for it monthly. So it still feels like I am paying my car insurance monthly, but instead of giving it to the insurance company, I'm just setting it aside in my account. And then when that 6th month is due, I will go back in, pull that money out of my account and pay for it because I've already saved up for it monthly. I want to mention a side note here. Your car insurance premium is impacted by your driving history. So if you've been involved in accidents in the past and recently, that could impact your premium rate. So take that as a caveat. Fortunately, knock on wood, my husband and I have not been involved in an accident, I think, since we were married. We're really safe drivers, I have to say. Also, if you have an older vehicle, your car insurance premium might be a bit higher. That's because insurance companies seem to think that older cars are less safe. I don't know about you, but I drove a 2002 Ford Escort ZX2 for 11, 12 years, and it was really safe. Kyle had driven a 2003 Jeep Grand Cherokee. And what was really interesting about that is when we moved to California, the insurance premium was $492 for our 6-month premium. And then when we bought our 2015 Subaru Forester in cash, our insurance premium dropped from $492 to $380 because it was a newer vehicle. All right, so to recap all this, I know I unpacked a lot of stuff for you, but in order to know exactly what car insurance you need is remember the 3 types of car insurance types: liability, collision, comprehensive. Your liability, you are going to max out $250, $500, $100. Your comprehensive and collision, raise your deductible to $1,000 each. You're going to get multiple quotes from multiple companies and make the switch. You're going to optimize. Pay the 6-month premium as opposed to the monthly premium and see how you can bundle other existing insurance policies.
But back to the video. Insurance. It's the annoying necessity that we all pay for to make sure we don't end up in massive amounts of debt if our house burns down, if we crash our car, or if something tragic happens. Insurance helps us maintain peace of mind, knowing that even if something bad does happen, someone else is going to pay for what it costs to fix it. Though, to an untrained eye, this can be a little perplexing. I mean, if you pay $200 a month for home insurance, and after only 6 months your home burns down, the insurance company will buy you a new house, likely in the matter of hundreds of thousands of dollars. But you would have only given them $1,200. Why would they do that? That's the power of insurance, baby. The basic concept of insurance is that a company, the insurer, offers a guarantee for a certain risk that may or may not occur. Then another party, the insured, pays the insurer in exchange for protection against that risk. When a bunch of people do the same thing for the same risk, eventually the insurer is getting a lot of income. But the probability of that risk happening is spread out among a bunch of people and stays about the same. Insurance companies make money by figuring out how much money they need to bring in to turn a profit on a given risk with a given probability. That calculation then influences how much each of the insured pays each month. In general, it's simple math, but in actuality, insurance companies have highly complex models for all of this. Not every insurance company offers the same insurance. Most insurance companies will specialize in their own kind of insurance. This is because each company has to develop a complex model to ensure that they can make money insuring a profit. If you estimated that 1 in 100 houses burned down each year, but it was actually 5 in 100, then you'd be losing money pretty fast if you insured those houses. You'd probably charge too little for everyone's insurance and then end up on the hook for those 4 extra houses. There are many types of insurance companies, from auto to health to life to homeowners. Most people in the world have these core insurance policies, some of which are legally required to be held, like auto insurance. You might be wondering, though, why wouldn't you just want to save your money each month, get to hold on to it in a bank account, then if nothing bad ever happens, you have a lot more money? Well, while that may be true, it makes you the one exposed to the risk. If you put away $200 a month for a year to save on home insurance, you'll have an extra $2,400 at the end of the year. However, if your house burns down the next year, well then you're going to be out the few $100,000 that it's going to take to fix it. A pretty bad deal. Is that a risk you're willing to take? Chances are it isn't. That's why getting insurance is generally a good thing. It takes all of the risk and anxiety and financial burden off of you and puts it onto a much larger company that can afford it. When you understand insurance as just a way of paying a company to assume your risk, you can start understanding that insurance could, in theory, be offered on virtually anything. Are you worried that while you're toasting a cinnamon raisin bagel, your toaster will overheat one of the raisins, causing it to burst into a spontaneous plasma and destroy your entire pantry full of stockpiled bags of Lucky Charms and baked beans? Well, that's oddly specific, but someone could probably insure you for that exact thing. Likewise, maybe you're really attractive and worried that if you fall one time, you're going to hit your face, stop being attractive, and be depressed because no one will like you anymore. Well, somebody could probably insure you against that, too. This isn't too far off of reality either. Celebrities will often have parts of their body insured because their image is a source of their income. There's a few more pieces to the puzzle here, though, and we should talk about reinsurance and insurance claims. When an insurance company wants to buy insurance on their own insurance policies, well, then they buy something called reinsurance. That is not a joke. Say an insurance company realizes that they're overexposed to home fire insurance and a hot summer is coming up. Well, they could take out reinsurance policies on their insurance policies to protect them from high losses in case all their houses they insure just burst into flames because global warming and whatnot. Then all the risk is all on the reinsurance agency. This is a necessary thing, too. Think if an insurance company insured everyone in Florida's cars, but then a hurricane came through and destroyed all the cars. Well, that insurance company may owe more in payouts than they have, and once they run out of money, well, then no one would get money for their destroyed car like they thought they would. Reinsurance is necessary and important to ensure that insurance companies remain profitable and solvent to pay insured when there are claims. In terms of claims, insurance companies also don't just automatically pay out if you have car insurance and you show them a crashed car. The insurance company will investigate to make sure that you didn't intentionally crash your car to get the payout. If they find out that you did do that, well, that's called fraud and you can go to jail. Faking insurance claims actually does happen quite frequently. People see it as a way to either get a big cash windfall if they're in hard times, or get out of a car or house payment that they can't afford. However, car insurance agencies employ top-of-the-line investigators to make sure that they don't make faulty payouts. So now you can likely see insurance is a big business, and if you have the right models, assume the right kinds of risk, and have good investigators to make sure that you are not defrauded, well then you can make a lot of money. Conversely, if you buy insurance and something bad happens, it can save you a lot of money. In most cases, insurance is a winning formula for all parties involved. It helps consumers be less worried about bad events, and it makes companies a lot of money. And that's basically how insurance works.